Hi, this is Darshan Bhatt from Glovista Investments with our market outlook for the week beginning June 1st. This past week, the macroeconomic calendar confirmed the ongoing acceleration on the global activity side, especially via stronger than expected releases out of the Eurozone, as well as the expectational effects from the news of a pickup in vaccination pace. On the US side, the macroeconomic data also confirmed the economic growth outlook, though it was more underwhelming than some of the other regions. Some of the underwhelming data out of the US this past week included April new home sales, May consumer confidence, and May Kansas City Fed data, which all came below expectations. Despite such underwhelming data on the consumer confidence side, this past week also provided a strong evidence of a solid pent-up consumer demand from the release of stronger than expected retail sector earnings from companies such as Best Buy, Gap, Dick's Sporting Goods, and Abercrombie and Fitch. From a market perspective, the risk indices resumed their year-to-date uptrend with the S&P 500 index returning 1.16% and the Nasdaq index returning 2.06%. Emerging market equities and US small caps outperformed, returning 2.39% and 2.45% respectively. Growth sectors and indices outperformed their value peers owing to that group's near-term oversold levels as well as stabilization in US inflation concerns. As we look ahead, we believe the equity markets could continue in a consolidation phase owing to the countervailing effects stemming from adverse summer seasonality on one side and on the other side, near-term abatement in US inflation concerns. We continue to favor value and cyclical-oriented markets and indices, including US financials, materials and industrials, emerging market equities, and select US large cap growth stocks. Over the past few weeks, we have increasingly embraced a lot more constructive outlook towards Eurozone equities on account of the expected pickup in growth owing to a pickup in vaccinations. And in addition, the Eurozone market's value-oriented sector tilt, given our views for a outperformance of value factor globally. From a macroeconomic calendar perspective, this week we shall see the release of several indicators, including the ISM manufacturing, durable goods orders, and non-farm payrolls out of the US, the trade balance and leading index out of Japan, Caixin PMI and trade balance out of China, retail sales and factory orders out of Germany, and host of PMI indicators from emerging market countries. We wish you all the best and thank you for listening.